Hey everybody, happy Friday. Appreciate you guys. Sorry about the rescheduling yesterday. I appreciate that you were able to meet with me here today though. I don't like to go a week without having some kind of presentation. Make sure that we're staying in touch with you and you're getting a feel for what the software has told us to expect and whether or not that thing has actually transpired. If you're new, I see a few of you guys here that are new. Also, welcome back, ADFF. Josh, good to see you here as well. A few other new names. Just wanted to remind everybody what it is that we've been able to achieve over the last decade and a half now. Thousands of customers all over the world. 4.7 out of 5 Trustpilot rating with actual verified trading customers. We do something a little bit different based off of torturous experiences we had when we were starting out learning how to trade in this industry. Horrible experiences we had with gurus and trading vendors, and the biggest problem of all, manipulative institutions who continually toy with the markets with seemingly no legal repercussions. And so the two of us, my best friend and partner and I, sat down together and we decided to dissect the markets. How did they really work? Our jobs in our former lives involved designing, building, and maintaining automated machinery. And we understood at an early age if you wanted something to work correctly and run it properly, you needed to know how it worked, how it operated. And so after careful consideration and years of engineering, we are the only company, to the best of my knowledge and ability, that produces indicators and programs that tell you far in advance when markets are likely to produce upwards or downward movements, oftentimes to the second or the minute of the move. We accomplish the overcoming of your hurdles, so to speak, by giving out times and directions days in advance. And earlier this week, if you've been taking our trials, as many of you have, we set out to prove that things are working by giving you the times and directions in advance for markets like the E-mini S&P, crude, gold, the DAX, euro currency, the Dow, E-mini NASDAQ, euro dollar, pound dollar, and Ethereum, with the hope that you'll follow along and start to see the things that our customers and we have seen for quite some time now. And that is that the market you trade is in fact heavily, heavily manipulated and predictable. And so as we sort of come back here to our pre-canned PowerPoint presentation, I've noted some of the principles that have helped us communicate predictability to customers over the years. Now with the advent of AI especially, we're able to look at complex, for lack of a better word, clusters of seemingly random data and look for patterns inside of them. We see things that repeat over and over again inside seemingly complex systems. And so entire disciplines of science are broken out into predictions. For example, chaos theory teaches us that even in chaotic systems like weather patterns, for example, there are things inside of the data that allow us to predict with greater and greater accuracy when a hurricane will form or where a tornado will spawn. And that's kind of the way our software works. We're looking at information that at first doesn't appear very informative, right? When I showed my wife a QR code for the first time, she didn't really know what it was. Is it a piece of modern art? Is it a drawing from one of the kids? Is it something from that Minecraft game? No, actually, it's a QR code that when you put a camera over it, takes you to a web page. There's information inside of the data. And so if we do that same thing with any market, oil or gold or Tesla or GE or Dogecoin or Bitcoin, when we ask the computer to look in this instance for times that the market is producing similar movements, let's say in this example, we ask the computer to look at oil futures. It may come back and tell us, hey, while it's not happening 100% of the days, quite often, many times, the market is rising at 10:35. And so perhaps tomorrow at 10:35, we should be waiting for, looking for, anticipating a move to the upside. And our most popular indicator now, going on 15 years, is the TachEon Warp program. And its ability essentially encompasses just that. It looks backwards into the recent historical data and scans for repeating behavior patterns that shouldn't be there, meaning oil shouldn't go up at 10:35 2 days in a row, let alone 2 weeks in a row. And when those times stand out, when they pop out, when they appear, it notifies us in the future. And so this idea of random markets sort of popping up and down like so many kernels of popcorn in a microwave bowl, begins to become dispelled, perhaps not completely, but a large enough percentage of the time to question why we use gurus and lagging indicators at all. So again, one of the ways that I accomplish overcoming those tremendous hurdles is by giving out the signals in advance. In this case, we publish them every Tuesday for those of you taking video trials on the web page or requesting additional time from David to scan along at home during your trial. And we ask the question, what actually happened on Wednesday and Thursday, 2 days later? And so that's one of the things we're going to look at here together. So for example, if we go back and we look at the E-mini NASDAQ for yesterday, Thursday, you'll notice the output of the indicator available to us since Tuesday, for Thursday, was alerting us to the possibility of selling pressure at all of the blue line times. Now, the only reason those times exist on the screen at all, the only reason those signals populate where they did, is because a pattern existed, meaning there would not be a selling signal at 11:32, but for the fact that over the last several weeks at 11:32 on Thursdays, the price of oil drops. That's the only reason that time is there. It's not some guru-derived special magical spidey sense tingling in my butt feeling. It's not some black box algorithm churning out these times with godlike randomness. 11:32 was there because it's happening a lot lately, and we don't remember because we're chaotic Homo sapiens trying to hang on to the back of these trading trains as tightly as we can. And then conversely, all of these times on the bottom of the chart for Thursday on the NASDAQ, and we can look at any of the markets that we had these times for and see what happened. A lot of you ask about the NQ. Were the times that the price of this market have been consistently driven upwards. The only reason 1026 and 952 and 938 are on this chart for Tuesday, indicating potential moves up on Thursdays, is that for the last several Thursdays at those times, more often than not, the market is driven upwards at those times, upwards at those times. Any questions? Okay. 10, 12. Before we go into the NASDAQ, I just want to pick up where we left off last week. We've been following along on the E-mini S&P now on the daily charts. Those of you that trade options, for example, with SPY or QQQ, used NVIDIA or Tesla or Caterpillar or any one of a multitude of equities that you're trading. You'll know that several weeks ago we predicted an upward movement from May 25th until Tuesday this week, June 6th. If you go back and watch the webinar recording on YouTube, you'll see where we specifically called out those dates. I then showed last week's webinar that we were expecting selling pressure to occur until June 8th, which was yesterday, and that buying pressure would then resume in the market. And today you saw the breakout of this congestion zone, this consolidation zone, right here, occupied by that selling pressure signal, and we finally broke up above it here today, right on time. I do want to make note of something before we continue. I'd be remiss not to point this out. In your handout section of the GoToWebinar chat box is a book that helps us discern certain patterns in time on the charts. And those of you that have been students with me for a while will recognize what's happening on the S&P daily chart right now. When we have a buying pressure time, a predictive buying pressure time, and either that candle, the candle to the left of that candle, or the candle to the right of the signal candle are higher structural highs. When those things tend to appear, we notice that if any one of these three candles are a higher structural high in relation to a prior swing high, the market tends to reverse and go in the other direction. This is known as an inversion signal. The polarity of the signal flips. And while I don't want to go too far down that rabbit hole, the software will actually draw these patterns on the chart for us automatically. I do want to note that candle number 3, in this instance, Bala, candle number 3 is a higher high. And so on this chart, we're going to put a red arrow pointing down right here. So we actually have the possibility of the market reversing today and dropping down into lower lows. So we'll just denote that with the number 5 right here, and you guys will remember. The right way to trade a pattern 5 is to, let me see if I can find, there it is. The right way to trade a pattern 5 is to put a buy stop just above the candle which has formed the higher high. So in this instance here, if you were looking for a trend continuation signal, our buying stops would be just above 327 area, just above that high from today. So the settings on this chart, the ones that we've been using for the last couple months, this is a 1230 trading days with a swing strength of 5. 1230 trading days with a swing strength of 5. All of the other charts are default values, Bala, a 71400 calendar with a swing strength of 8. Swing strength of 8. So that's what I'm using during the webinar. Now, if we go back and we look at the NASDAQ signals for Thursday, right? We'll pull these dots out. We'll come back and we'll reference the settings just so you see 1012, 944, 952, 1012, 944, 952. Can everybody see those settings on my screen right now, or rather the signals on my screen? Remember, the times that are displaying on the lower histogram were the times that the entirety of our prospect base, those customers who don't have the software yet, on our mailing lists and on social media, about 80,000 people had access to the forecasts for Thursday on Tuesday. So 2 days before these signals had a chance to stand or fall, we'd been waiting for 913, 944, 938, and so on. And one of the things that I'd like to do with you, just as a cursory analysis, is reference the lowest sort of hanging fruit, right? Those signals like 904 that appear at the bottom of a pivot. Those signals like 913, which actually drop into lower lows. A signal like 938 that breaks out and goes into a higher high. A signal like 944, for example, 14 minutes after the open, that drives down into a double bottom at 952 with a stop run. And then a signal like 952 on the NASDAQ, which drives higher into a new high and a double top with a stop run at 1012. Pulls back lower into 1026 and then drives higher 1026 into 1048. And you'll see what's happening at these times. We're seeing double tops and exhaustion patterns at the sell times. We're seeing double bottoms at the buy times. Then we come into 948, and does everybody notice how it goes into a consolidation zone? That's known as a redistribution phase, or a reaccumulation phase, forgive me. People are buying at the bottom and selling at the top, preparing for the next burst up, which was predicted on Tuesday to occur at 10:58 on Wednesday. And so we're starting to get this sense that there were planned movements at these times. And we can debate who made the plans and who made the moves. But the reality of the outcome here seems to imply, Richard, that the signals that we've been waiting 2 days for as of Tuesday produced significant movements at the times we were expecting those things to occur. Do you give the settings for different charts, NQ, ES, GL, etc.? Richard, there are basically 4 groups of settings that will work well on any market, 4, maybe 5. And I teach people them all the time. It's a commonly known thing. For example, first, before I show you what the settings are, Richard, are you a customer yet? Forgive my short-term memory, I kind of blank out more often the older I get. I just turned 52, which those of you who are older say is not that old. However, I'm forgetting more and more. Yeah, so Richard, here's the really cool part about these times. The software right now is using a standard default setting that I found works well for all markets all the time. Can you see on here where it says 714.00 on the right side? I will take a sip of my Mountain Dew while you answer. Okay, cool. Fun fact, the software, when it's doing its analysis with those values, here you'll understand what the 714 means. We'll sort of pull back the mysterious curtain for you. If you envision a calendar, right, that's standard verticals for the days of the week, horizontal for the actual weeks. What a 714 is looking for involves the last 2 weekdays worth of analyses. So today being a Friday, for example, if we ask the computer to use a 714 analysis for today, Richard, it would go back 7 days and 14 days. Does that make sense? It's going to analyze 7 days ago and 14 days ago. So essentially a weekday or a vertical look back. Does that make sense? That's what the 714 is referencing, 7 days and 14 days ago. What happened a week ago Friday and 2 weeks ago Friday, 714? That value initially causes distress with some people. That's all the data you're looking at? Yeah, that's all you need. The banks, I believe, hide their tracks. If you go much further beyond that, the patterns aren't as relevant as the most recent ones. More lookbacks would not reduce signals. More lookbacks would actually give you more false signals. Let me show you an example of the simplest of signals. But essentially, Richard, there are a few other settings that work well. You can use a 1, 2, 3 look back. You can use a 3-day look back. So we'll color this one a separate color. A 3000, a 1230, a 71400, and then 1, 2, 3, 4, 5, 6, 7, 8, 90000. Ruben, when do you get the forecast? I don't understand. The software is loaded directly onto your computer. It's an indicator for NinjaTrader. The forecasts are always available in the future. So, for example, we'll come back and look at Thursday. Here's the NQ for today, Andy. I won't overlook your question. Today, Andy, if you were trading the NQ signals, I don't know when you would have started, let's say pre-market 9 o'clock, right? You would have been long at 9:10 and exited at 9:13 for a $7.50 window, 140. You would have entered long at 9:23. Your stop would have been below this white line at 14.53, and you would have exited at 9:43. That would have been a $1,200 move, Andy, today with a 62, 53, 10. So you basically had a 6-to-1 risk reward. The next signal with trend was at 10:02, and you exited somewhere around 10:21. That was a $400 move. And then at 10:26, you had your first stop out, and you gave back a little less than $400. Does that make sense? Before lunchtime. So that was today. And then in the afternoon, if you look at the signals, Andy, you see how it's kind of following that same, the signals are near the moves most of the time. If we come through, for example, and just pick the lowest hanging fruit, 141, for example, 238. This one finishes where it starts over here, 308, 315, 339, 348, and so on. Joshua, I teach a system that says when we're above the moving average, we go long. When we're below the moving average, we go short, based off of how other traders have used the software consistently. So Joshua, I have a 120 period moving average on my chart. Again, we're looking at the Thursday afternoon signals now. And the general theory, Joshua, as a filter is if the market is moving higher, if it's moving higher, then the times that we're expecting the market to move even higher should, right, should hold more weight. Those times should be moments, Joshua, where we're pouring gasoline on an already mature fire. Does that make sense? And so when I ask the questions to the customers, how are you using the software? And if you are profitable or not, the majority of profitable customers are trading with the trend as a system. Yeah. So Josh asks, so if it's above the moving average, we shouldn't go short. So if you use the first method, I want to address your second potential method, right? We're long here and out by 254. We're long here and out by 324. We're long here and out by 345. We're long here and stopped. You know, after the market closes, we're long here, out by there. We're long here and out by there. So Josh, that of course makes sense. However, that's not the only way to use the signals. I'm not selling a trading system. The signals can be used in a number of different ways. So for example, many of you or about 20% of my customers that are making money with the program are top and bottom pickers. And so one thing they're doing, Josh, looks more like this. Let's try something that looks like that, right? Let's see. Yeah, that would be a good way to show it. They're looking for overbought or oversold signals. So for them, Josh, they would be selling the 451 signal because it's at or above the upper Bollinger Band. And then they would be selling to the middle and lower bands or exiting by the next time. Does that make sense? If there's a buy time below the lower band with divergence, for example, that would be an area they're looking for it to go. Yeah, massive order flow at the execution, deltas with the order flow analyses, things like that. So it's not the only way to trade with it. It's just when I show it the other way, it's based on the way most of the customers are actually using the program. If you think of it in terms of raw data, the information is just alerting us to anomalous behavior patterns in time. For me personally, when I'm counter trend, Josh, my risk goes into half and my reward goes into half modes. So for example, when I'm looking at some of these signals in a more advanced context, Josh, if there's a double top like that, I'll short it with that much risk. Does that make sense? If I see a double top with a stop run like that and it falls back down, I'll short it. My risk gets tight when I see this on a counter trend trade. I'm looking for rejections that have low risk. So up at 1132, for example, if I see the highs are right there, I'll take a shot. But at 1202, the risk is too great. At 1222, we're coming up into a double top, so that might be a place I try a short. So you're not restricted with the program or the indicator, but you do have to make a decision when you're using the signals how am I going to use them? Where will my entry be? Where will my exit be? Where will my stop be? One of the huge advantages using the program is that you know in advance when the signal is coming and for how long that move should last. So for example, on today's E-mini S&P 3-minute chart, I knew there would be a cluster of consolidation in this area right here. Josh, do you see why I might infer some consolidation there? There's a bunch of signals in a really small period of time. So for me, a trend really doesn't have time to develop when you have signal after signal after signal. Okay, that almost shows indecision across the last several weeks. But between 8:42 and 9:45 today, boy, there's not much indecision, is there? So my personal experience trying to pick tops and bottoms hasn't been a very fruitful one historically. And so when I factor out these trend trades, it tells me, hey, if this trade is going to work, your risk shouldn't be any greater than where my white line is. That white and the blue lines correspond to a 1.5 ATR calculation, average true range. The program is saying, hey, look, Mike, on average, the size of a 3-minute bar right now is X. I'm going to put your stop X times 50%, X times 150% on top or below. So I'm going to put your stop a little more than one average bar length away, and let's see how far this sucker goes. So at 8:42 this morning on the ES, I had two pieces of information on my side. Number one, if we're looking at it from a structural context, Richard, I knew the swing low was right here from 836, that drop. I knew my entry was right here at 299. I also know, Josh, that I have until 9:45 for that time window to last, right? And so going into every trade, there are several things occurring. Number one, I'm not over trading. Most of you, if not all of you, are like me and others, you have a problem taking too many trades, revenge trades, or you get in too early or too late and then you get out too early. So all of that's been mitigated to an extent, right? I have so many appointments with the market and then I don't have any more. So I can't blame anyone but myself at the end of the day if my order total exceeded the number of opportunities that I was aware of before the day started. Number two, I don't have anxiety, signal anxiety. Is it going to appear now? Is the magical arrow going to appear now? Will my guru say something through his golden microphone at some point when I least expect it? There's none of that anxiety that comes from not knowing when the signal will appear. A lot of the systems, the signal disappears immediately. It's kind of funny. I'm a student of William Blank using the Wyckoff clock. I have no idea what a Wyckoff clock is. I do know that Wyckoff was a proponent of volume in relation to price action. But then after observing Gann, while he was the editor of Ticker and Investment Digest, Wyckoff actually began using time as a result of his observations of Gann. And so if we come here, for example, I have it in a more expanded PowerPoint. We'll see that most of the trading that's occurring today is the result of one of several people. Elliott, for example, Andy believed that markets were predictable via structure. It's where we get those Elliott wave patterns, X to A to B, B to C, and so on, right? Wyckoff believed markets were predictable if you referenced volume in relation to time. He is arguably the father of modern volume spread analyses. And Gann, of course, he sort of challenged all three of them and said it's not about structure. Structure is a side effect of time. It's not about volume. Volume is a side effect of time. Here, Wyckoff, a contemporary of Gann, and again, an avid observer. He had William Gilley, someone at the time who was of good repute in Wall Street, follow Gann and document his trades. He wrote up an entire article about Gann in his Ticker and Investment Digest. And I believe he modified the way he traded as a result of having interviewed and studied Gann. So if it's a chicken versus egg argument, I think you've got a good background in it, but Wyckoff didn't have a clock. Wyckoff was a volume guy, the guy who we should be making the most out of, the guy who we should be delving the deepest into. He was fairly adamant about time being the most important factor. He said everything emanates from it. Time is essentially the quantum layer of physics. All the subatomic particles, all the energy in the universe, all of the cycles that we can observe with the human eye, all of those things are tied directly to vibration and to timing. And so when we reference these signals, Andy, that's what we're looking at. Does that make sense? So I don't know that it's similar. I do believe it sort of comes first, though. And then you can see here Richard Long from 10:03 to 10:45. Then you can see the struggle at 10:45, right? The software has been warning us for a week to look for a down move from 10:45 until 11:27. So, Andy, yeah, there's a lot of stuff we can do to integrate what you've already learned. If you get the software, please tell David or Rachel that you want to meet with me for an integration training. I'll go over how to incorporate what you're already doing with what this does. It's going to pair very nicely with it, in fact. So, yeah, in terms of when do you get the signals in advance, here's the best part of the program. Can everybody see what's waiting for me in the future? Where did I get those histograms to send to you on Tuesday for Wednesday and Thursday? The same place you're going to get them from, your computer. These are the times right now for Sunday night when the market reopens for the S&P 5-minute chart index. So right now it's telling me 6:30 on Sunday night, expect a short-term drop. 6:48, expect a pop up into 7:15. Expect a drop down into 8:09. Andy writes, cool, it actually does already, even with 2 days that I have access to it. Yeah. And so we can see the times coming up already for Monday of next week. So we already, Richard, have the times, Joshua, Andy, we already have the times coming up for Monday of next week. So now if you're watching the Wyckoff clock, if you're watching for volume spikes, if you're watching for these things, you now know when to watch for them. If the signals like you've seen demonstrated so far today are appearing at actual highs and lows 6 or 7 times out of 10, and that's been the average over the last 15 years, then it stands to reason If you're watching for trend entry signals at those times, there's a better than average chance it will go up, and you know for how long, or vice versa, go down. If you're watching the Wyckoff clock and your signals line up with these patterns that have been appearing consistently over and over and over again on a Monday, then the statistics of your trade increase significantly. If you see a doji pattern at one of our times, or a bullish engulfing pattern, or an evening star, morning star pattern at these times, you go, oh, it's happening. My personal favorite is to look for stop runs at these times. And on a much more personal level, Richard, it helped me not get stopped out. I was always getting in the wrong direction. What looked like a long to me was a cleverly disguised stop run before a short. What looked like a short to me was a cleverly disguised stop run, breakout, false breakout just before a tremendous run or rise up. And so my worldview is that markets are extremely manipulated. Banks get in trouble all the time. According to most reports, JP Morgan paid close to $1 billion for spoofing in the precious metals futures markets, gold. They spoofed gold. And so it sort of begs the question, how did the signals do on the gold chart that we had available? And I want you to see here what's happening at these times in gold for Wednesday and for Thursday. And Richard, can you see what happened at the Thursday times for gold today? Thursday, a $770 move followed by a $150 move after the reports. Then there was probably a $150 short or stop rather, and then another profitable long at 2 p.m. They're still manipulating gold markets. They're still manipulating gold markets, and they don't care. They don't get in trouble for it. What do you mean by stop run? I mean this. When I'm waiting for a sell time, Ruben, can you see right here how the prior high was preserved at 740? They didn't break this high, did they? Okay. If I'm sitting here and I'm not taking counter trend signals, and Andy, I see it come all the way up through that high, and then Ruben all the way back down. Do you see that signal right there? I will immediately place my sell at the original sale price. That's a stop run. Same thing over here. Ruben, do you see what happened all along the base? It's telling me, be careful, from 255 on, we're looking for longs, and they keep coming down and dipping into the bottom, like termites crawling down and eating the wood. I love those signals. And then right here, Richard, can you see what I mean by a stop run? When they come and break the low 2 bars before the 10:05 signal. Ruben, it's the same pattern here as it is right here, right? Bullish engulfing, bearish engulfing. The banks will use a little bit of their money to create chaos. Let's make it look like a breakout to the downside right before they had plans to let it go up. Right before. And those end up being some of my favorite signals because they come with the most intensity and the most velocity. Let's see if we can find another example of that. Is there any here? No, there are none here that I can think of. The signals work too good these days. No, I don't see any stop runs on these days, guys. So Ruben, that's what I meant by that. Andy writes, I use Bookmap to look for stop run and iceberg orders at specific times, just an example. Yeah, Andy, a lot of customers, I have a customer in Columbia, South Carolina, who does the same thing. He does exactly what you're saying, but he uses the warp times to filter out which one of those iceberg orders to take on oil futures. His name is Gary. Great guy. If you ever want to talk to him as a customer, let me know. I'll connect you to. So Richard, did that make sense about looking for signals in the direction of the trend? Those moves tend to last longer and get you to a break-even condition faster. And once you're in that break-even condition, you're sort of able to breathe a little bit. Okay, I'm playing with the house's money, and I know how long I'm going to hold on to it. You essentially, like a Kenny Rogers song, you know when to fold them. You know when to hold them and know when to fold them. If I get in at 8:45, I'm out by 9:25. If I get in by 9:45, I'm out around 10:25. If I'm in at 11:25, I'm out by 12:10. And that's a tremendous, I can't overemphasize the benefits of that. It's a tremendous benefit. So for me, when I'm looking at a daily chart like this one here, and I know what the patterns are, and I see there's a pattern 5 here. If I'm a swing trader, Andy, do you know what just happened on my chart? Ruben, that's a stop run. Let me see if I can get the patterns to appear automatically so you know I'm not just drawing them by hand. We'll just uncheck that box. Okay. So Andy, you see where it just put that pattern 5 in automatically? I'll take my hand-drawn stuff away. So Richard, I already know from the book, the handout that I gave you, what usually happens at a pattern 5. So say you're an options trader and you're trading SPY, for example. The next signal on my chart, when does it come? Thursday, June 22nd. That's a 14-day window, bro. So right now, as the market was closing today, I can analyze and say, my risk is to here. My risk is to there. And if this signal is correct, it should come down probably at least to the bottom of this zone to re-challenge it, right? Maybe even as far as that swing low. But I have an understanding of the timing of this move. End of the week, we broke through, we broke out of this consolidation zone. Andy, how many traders just told their brokers to call grandma, get her money in the big Edward Jones fund? We're going long. AI is going to drive this thing to the moon. My buddy Bill at the tire store said his brother's uncle's sister's third cousin on her fourth side works at Google, and they said this thing is getting ready to explode. That's what happened today. I look at it and I go, oh, what did the software say to look for? Oh, that's a pattern 5. What usually happens at a pattern 5? It goes down. Well, how long is the window? June 24th, 22nd. And if I'm wrong, what do? If it breaks through the high, I buy it with a call and I hold it until June 22nd. Low risk put or a low risk call. But it's all based on time. And the time isn't based on some magical calculation. It's based on what the banks do, or an iron condor, sure. You guys have all these fancy names. You know, the unicorn, triple axle. You got the brown bear split. The Bugs Bunny, Daffy Duck, Twister. I always wanted to meet the people who gave the candle patterns their names and the options plays their names. I just picture these like 4'6" guys in their mom's basements. I shall name this the Iron Condor. Billy, do you want a sandwich? Not now, Mom. I'm naming patterns down here. I just picture these guys. They're like all former Dungeons and Dragons players. Nothing against the game. My son plays it. I shall name this the Three Soldiers Candle Pattern. Jeez, man, that was intense. Yeah, so I mean, when we're looking at these signals, it gives us a really good sense of when to be prepared. We can analyze price action and say, okay, where would they run the stop? And give us a very clear understanding of where the lowest risk entries are. So here's a little double bottom. There's the signal at 906 and in the Dow today. Huge move. And then you can almost see the head and shoulders pattern here, Richard, right? There's the shoulder. There's the head. There's the shoulder. You can see the neckline. And then the failure. But when you know when to look for those patterns, they have context. All right, this program told me this is when the selling usually occurs. How are these blankety blanks going to make me believe this is a long right now? Ah, look at that. Here's the shoulder, there's the head, there's the, you know what? Let me short this thing with a stop just above the shoulder high. Right? Let me short this thing with a stop just above here. Exactly. Andy goes, yo, bro, it's not a pattern, it's the clock at 10:30. Yeah, so we used this the other week to predict the pop in Tesla. I'll go over that setup here with you guys real quick. This one, I thought this trade was really cool. A lot of you guys took the calls too, which I was happy to hear. So in this instance, Andy, check this out. We had people taking puts from the 14th of April until April 26th. And then you can see again, Ruben, that bearish candle with the bullish engulfing candle right after it. For many of the customers, that was a long entry. They were looking for calls at that point, and they knew they had until May 15th. And then at May 15th, Andy, they were looking for puts, and it failed, right? It did it for a day, and then it started creeping up. But during the webinar, if you go back, it's a couple weeks old, I said this: when it breaks through the blue line, Richard, when it breaks through the blue line, what is it telling us about the entrenched behavior pattern? What is it telling us about what's happening on the chart? If the selling isn't occurring, if JP Morgan and Deutsche Bank and all the yucks at Credit Suisse aren't in a short position in Tesla when they were supposed to be, what are they most likely doing? That's right. If they're not selling, the guards have left the building. And I told everyone, I said, watch for the price of Tesla and the trend to reverse. This is a trend reversal signal. In fact, I actually have an entry signal based on that. I didn't really teach about it today, but one of my signals is called a puncture trade, where I look for breaks of the opposite signal. Check this out. And if this is too much information, I apologize. When the trend is up, Ruben caught it, I'm looking for punctures of the counter trend stops. if the trend is up, in this example, you'll see there's a blue dot. The stop is 1.5 ATR values away. I'm expecting the market to go sideways or even down somewhat in the uptrend, consolidation or profit taking down. And it doesn't. It continues to rise. It continues to rise. And so the trade setup for me involves two things. Number one, I have a buy order, a buy stop sitting 1 to 2 ticks above the counter trend stop signal. If this thing fails, it means none of the institutions are following through with a pattern they've been following for weeks. Somebody whistled, "Hey guys, no shorts now." What did he say? He said no shorts. Well, what are we doing? Listen to me. Let the prices rise. All right, I guess we're not shorting here. Look at that. It's still going up. These knuckleheads think it's going higher. I guess it's going higher. And so I wait for that almost as call it a failure breakout, a breakout failure with trend. And to me, it's a very strong indication that the trend has reversed. When people should have sold again, they didn't. Huh. Why didn't they sell just now? Oh, they have inside information like they always do. They know about the Cybertruck orders. They know about the new battery facility in Florida that we don't know about yet. They know about the new Tesla car that's going to sell for $18,000 because they all go to the same wild sex parties in San Francisco. I don't know. They know something you and I don't know. I know when they don't follow through on a pattern they've been following, something's usually up. And so in the webinar, I told everybody when it breaks this blue line, if it breaks it, you should be looking for longs and buying stock in Tesla as hard as you can. So if you did, the signal lasts until the next signal. So it rose $37 from a $180 valuation. That's not too bad. That's what, 10%, 20% move. And then the next signal with trend was on June 5th. We talked about that last week, and it's gone up another $35. The next signal is June 22nd. These are 120 period MAs. I'm using an EMA, Echo Michael Alpha. The reason I stick with those is because, Richard, I've always used them on my Thursday presentations to the very first webinar we ever did. And one of the things I try to do to preserve my reputation is not change the settings of the program indicators week to week like other vendors do to make it look good. I could very easily change the values each week and not give you the times in advance and make it look like a perfect setup every single week. But you would smell that out and the trade forums would detect it and publish their findings, and we wouldn't have been in business very long. I've been accused of being a scammer no fewer than 3 times this week. And every time it sort of sends me into, confession time. It puts me in a little dark place. There are a bunch of people here at the company that all work really hard to help people get set up and trained and get started and show live entries. But it's me. I am the Zelensky of this company on CNN and standing up in front of everybody at the Traders UN. And my name is the one that gets dragged around. And you should read some of these emails. It hurts. So one of the reasons I go to the lengths and the extremes that I do with transparency, where I can't really affect the results, they are what they were, is not change anything. So in the webinars, long story short, I use a 120 EMA. My personal trading, I use a 20. I use a much faster moving average for my personal setup. So if I were using the 1 minute NQ, for example, you would be hard pressed to see something smaller. Let's put the EMA on there. I would have a 20 for my filter. Most of the markets I look at, like CL, RTY, and NQ, they move pretty fast. No, don't be sorry, Luke. It's par for the course for me. So Richard, I'm using a 20 most of the time on the faster markets personally. So there's room to optimize. There's room to conform the trading signals to what you're already doing. You don't have to use the setups or the indications that I'm using, but whatever you use, right, Andy, be consistent. Don't change it day to day, week to week, month to month. That's where you lose your statistical edge and things start falling apart. Once you go off script, it's kind of hard to blame the system at that point, right? You kind of did it to yourself. Just in passing, this is something you can use on forex pairs. Let me get this over here. You can see the times coming up to the right. This works on cryptocurrencies. It works on forex pairs, works on equities, all the futures instruments, of course. Anything you have data for with your system. Now, someone asked earlier about TradingView. We do not make a version of this for TradingView. We have been a NinjaTrader company for the history of the company, 15 years. Unfortunately, TradingView does not have a data port to connect to NinjaTrader. Those guys actually know each other. They have a friendly competition. I keep hoping that one of them will buy the other one. I have this sneaking suspicion that if NinjaTrader's web-based and mobile-based platform doesn't work that well, they'll pull a merger play and gobble up TradingView. That's my guess, but my guesses are almost always wrong. Same thing with TradeStation. It doesn't have the processing power to plot these signals. And Josh, it actually won't let us plot the signals on the right-hand side of the chart. Yes, Andy. Yeah, I got to go back and change that. When they upgraded the platform, they took away the ability to project signals to the right. So on any platform, here's a fun fact, and Andy, it does come with fractals. I forget to mention that every week. Every other platform doesn't let us draw stuff, Joshua, over here on the right side. So we can't show the signals coming up on those other platforms anymore. Ninja's pretty much the only one that lets us do it. So if you don't have the platform, you just got to get data for it. There's a myriad of ways to bring third-party data into the platform without having to buy it for trading. I'm using a company called Kinetic. It's about $80 a month to get the data into the software. And then you change the settings. If you want to look at different markets and different classifications, you can sort of see what the forecasts are for different pairs. So I just changed from the euro dollar to the pound dollar, and then I can change it to the Australian dollar if I want to check that pair. And it's just a matter of changing the signal. We can go to the dollar Canadian, no harm, no foul, and get that information so that we can react to it. And then NFLX, we can do that same thing. We can bring in a stock, for example, and load more information in there to get the patterns calculated, and then see that result when it comes up. You can, what most people do, Josh, is they'll connect their other stock platform to NinjaTrader. You can connect your Interactive Brokers account. You can connect your TD Ameritrade account to NinjaTrader. So you can do all of those things, right? Let's go ahead and close. Didn't like my Netflix account for some reason. There we go. Any other questions about this? Those are great questions, by the way. You guys did good today. Okay. Yeah, so sort of kind of coming around the horn here, we sort of believe ultimately our worldview is if you're trading is a guess about the future, right? And even with things like Bookmap and even with things like order flow and volume and price action, there are ways to cloak, there are ways to deceive, there are ways to spoof the market to believing orders are there when they're not. So Andy, you can have an example with JP Morgan making orders appear on the ladder that aren't really there. And it's illegal, but no one gets caught most of the time. Time, I believe, is the purest element in trading. And I have to agree with Gann after almost 20 years of watching these signals. When you see it happen over and over and over again, you start to ask yourself, why isn't everybody following this? Why is everyone sort of chasing their tails with these overly complicated, super complex, guru-based systems? You know, don't tell me to journal on the trading forum. The only way to trade successfully is to journal. You know what my journal would have said by now? Sucked today. Dear diary, read my journal from yesterday. It's the same. I think I'm going to suck tomorrow. See you tomorrow. But when I watch what happens at these times, I'm like, holy cow, this is how the machine works. There's a small group of powerful people in the world who have a plan to manipulate markets every day. And most of those people lobby Congress and lobby the presidents and lobby their senators, and everyone's in on it except me. I would like to know what the casino is about to do before everyone else folds. And in the end, that's resulted in a near perfect Trustpilot score. It's resulted in profitable trades with our customers, and it's resulted in a system that makes it less psychologically flammable to trade. You have so many times in the morning to watch for setups. You know how long the move is likely to last, so you stay in longer or get out sooner. And your stops don't get moved because you have to give them room to breathe, whatever that meant to the guru that said that to me. Read my mind, and you can guess what I'm thinking to tell him right now. He cost me a lot of money. So that's kind of what we believe. You should be proactive, not reactive when you're trading. And when you're able to, you know, get in front of these trades and know in advance kind of day after day after day when the moves are likely to occur. I mean, just look at these ES signals as we go back day after day. You can sort of see this is a common occurrence. Even in the overnight session, in the Asian and the London sessions, these signals are producing these moves at these times. And when people leave these webinars without the software, even having seen the proof, even right now, some of you are asking, can I watch it for even longer? Can I have a 4-year free trial? I'll send you some Skittles. It's like there's this part of people that won't accept it. Wait, you gave me the times 2 days in advance. You've done this for 15 years straight. I'll tell you what I'll do. I have a big family and a lot of friends. I'm part of a trade group. There's 1,500 members in there. If you'll just give it to me for a few weeks, and if it works for me, if I can pass my Apex account with it, if I can make $500,000 with it, I'll tell everybody. It's exhausting. It really is. And it's saddening. It's disappointing. But I've learned a lot of people need to get to rock bottom before they realize how valuable your rope was. Like, nah, I'm good with ropes for now, bro. Free falling's fun. Feels like you're flying. Hey, what's that? That's the ground coming up fast. And he's going to lose his account in 3, 2. I met with a guy earlier this week. He's reset his Apex account over 200 times. 200 resets. Now, do the math. It's what, about $200 every time you reset? Software is too expensive. Call the guy next week. I can't buy it. I just lost $50,000. I was in Netflix in the wrong direction. And here we are, telling you it's going to go up at 10:06. It's going to go down at 9:57. It's going to go up at 9:33. And nobody believes me. I'm the scammer somehow, which is fascinating. 100% fascinating. If you would like, if you do believe me, I'm sorry for being a little dark today, but I want to be honest before and above everything. If you'd like to get the software, on our website, there's a product store. The product we've been talking about is TachEon Warp. If you click on the Learn More button for TachEon Warp, it's going to take you to the page that has the buy link at the very bottom of the page. When you click on that orange link, there's going to be a pop-up. We have a trading room that is run by an actual customer who trades live, makes money, and he asked if he could teach the rest of you to do what he does. If you want to follow a guy like that, that room meets 8 o'clock to 12 o'clock New York time, East Coast time, Tuesday, Wednesday, and Thursday every week. Colin, if you've met him yet, you know he's a super nice guy from the UK. If you're not the kind of person who wants to see live trades and you got your own thing going on like Andy does, don't need it. But if you're a hands-on person and you like to follow along or shadow trade other people, that might be something you want to add to your cart when you get started. There's a nice promo for that, 25% off. Then when you get over here, you're going to want to use the promo code W. Let's use a different color, Mike, shall we? These people are not mind readers. WARPF. Warp off. If you plug that into here and hit apply, it will take $500 off the cost of the software. Now, please don't write me an email and tell me that I'm a scammer because I'm using high pressure promotion code techniques for you to purchase. It's been the same promo code since my youngest son was born. I'm not using this as a act now or else thing. I'm using it as a way to sort of reward you for coming to the webinar, trying to save you a little bit of money. We haven't raised the cost of the software in, 7 years. There's no monthly ongoing fees. There's no maintenance fees, yearly update fees. There are no fees. I hate fees. I hate paying fees. I don't want anyone else associated with me to pay fees. So factor that into your decision. It's a lifetime purchase. You get 2 computer licenses, a video training archive that has everything from very basic setup stuff to more advanced techniques and integration with other setups. You get access to our Skype community. We have over 100 traders active in there right now, sharing their results and settings with each other in our Skype group. You get free installation, white glove installation onto your NinjaTrader platform. We'll help you get it set up and connected to your other platforms like TD Ameritrade and Interactive Brokers too. No need to do that for yourself. Undying gratitude. And again, a tool that has a 4.7 now out of 5.0 Trustpilot rating. You can go back and read those reviews from actual customers who've actually purchased the software. No fake reviews, no removed reviews. We're not allowed to do either of those things as a Trustpilot participant. Venus, you need anywhere from 8 to 16 gig of RAM. 16 gig of RAM. David, did you see Andy's note there? Send via my email, Minman. Thank you, Andy. We'll send it to you right now. Also, Andy, you are correct. This does include the fractals program. I haven't changed the website yet, so you're going to get another indicator that tells you what support and resistance levels the market is likely to bounce off of. I didn't have time today to go into that, but Andy did remind me to mention fractals is included. That's an additional $1,000 discount off of that. It's free and pairs really well with that. So I'm going to stop here and get rid of all this stuff and basically thank everybody for their time here today. I really appreciate all of your participation and the questions. I do work with a gentleman named David. If you get a phone call or an email from him, he helps onboard new customers. Venus, Andy, Richard, those of you, ADFF, Min, he is associated with the company. He's not some spam guy from Venezuela or Nigeria. So if Dave reaches out to you via email, he gives you his phone number, or if he tries to call you, just hear him out. He's just sort of there to say, hey, you know, if all you've got is 5 bushels of apples, we'll take that on a trade-in and help you get started. You know? If there's a special circumstance, you need a payment plan, he's really going to work with you to make sure you get successful. We care about you being successful, believe it or not. Otherwise, that'd raise the price to about $10,000 and had a $500 a year maintenance fee on there. But when you do that, you're not helping the people who need it the most, or at least I think. May the wind be at your backs. May the sun shine on your faces. May the valleys rise up to meet you. May the mountains of adversity lay low before you on your journey. I honestly, sincerely, from my heart, wish you success in everything you pursue. I am on your side. I am for you. We are for you here today. And I hope you'll consider joining our family, becoming a part of something small but great and mighty, intimate and dedicated to helping you achieve your dreams in trading. Trading represents so much to so many of you, so many different things. Taking care of your parents, retiring early, helping with a charity that's close to your heart, supporting family members that are in aftercare, traveling with your spouse, so many different things we've been a part of, and it's truly humbling to know an idea that we had so long ago has accomplished so much in your lives. But if you're not a part of our group yet, please consider whether or not to do that here today. We'd be excited to come alongside of you. Have a great day, everybody. Thanks again for the extra day to do this on Friday. Next week will be at the normal time, Thursday at 4 p.m. Hopefully by then, many of you will have the software for yourselves and many profitable trades under your belt. Know exactly how long to stay in the trade, what time to look for it, what time to get out of it, and how long to stay in it. No one else in the world can offer that, and I hope you'll take advantage of it here today. Have a great night. Bye-bye.